Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe. Today's topic is partnership.
We're going to cover what is referred to as an appropriation account. So we'll be preparing profit and loss appropriation accounts to show how profits and losses are shared among partners. So at the end of the lesson, you should understand how to prepare that. Partners' current accounts to record drawings and share of profit or losses, and how to prepare partners' capital account. Now, before I go into a work example, because I'll be looking at a work example in this lesson, partners prepare what is called a trading and profit and loss appropriation account. The trading account is nothing new to you, nor the profit and loss, right? The trading account is used to ascertain the gross profit or loss, while the profit and loss is used to ascertain the net profit or loss. While the appropriation, which is new to you, is it's part of the financial statement prepared by the partnership business, and it shows a recording of all profit or losses for the year is shared between or among the partners. Now, the current account is simply a record of a partner's drawings and share of profit or loss. And of course, the capital account is basically showing the amount of capital contributed by the partner in the business. Or if the business is already in existence, then of course it would show the balance coming from the period as it relates to the capital account. So we're going to look at that work example. Now, this question is taken from May 2005, and it is number 3. Partnership questions are usually on exam. And the question read, remember to read your questions first before you go through anything. Pick out your main items as you go along. Chris and Dorcas are in partnership. Their capital and current accounts as at January 1st, 2004 are as follows. And you're presented with the capital balances where you're seeing Chris as $40,000, while Dorcas as $60,000. Now the current account balances, it's reflecting that Chris is 5,000 credit balance and Dorcas 3,000 credit balance. We'll deal with that in the preparation of the current account. But we're seeing where drawings was taken by both partners. Chris took drawings twice, 17,000 June 30th, while in December, the end of December, Chris took $17,000. Dorcas took 12,000 April 30th, another 12,000 August 31st, and at the end of the year, Dorcas went ahead again and took 12,000 more for personal use. The partnership agreement provides for the following, and when you're doing a partnership question, you need to look out for all of this information. It is very important in preparing your response. Profits and losses are shared between Chris and Dorcas in the same ratio as their capital. Chris is to be credited with a salary of $6,000 per annum. So Chris is to get salary of $6,000 per annum. Interest on capital is to be charged at a rate of 8% per annum, and interest on drawings is charged at 10% per annum. Now, what we're presented with is the profit for the year, which is $95,950. So we receive this profit, say it means that we don't have to go through the process in preparing a trading and profit and loss account to ascertain what is our profit because we're presented with that. Some questions are like this. Some you would have to calculate the net profits, and then you move into doing your appropriation. Before we look at the preparation of the partnership profit and loss appropriation account, I'll be working out the interest on drawings and the interest on capital. So the workings, and I'm doing this because I need to point out how we go about calculating the interest on drawings and that on capital. Now, remember the interest on drawings take into account the partner's drawing. So the formula is partner's drawings. It takes into account the rate. So we multiply that drawings by the rate. And the timing is important. How long for that accounting period they had taken the drawings for. And if you get a question indicating the period in which it was taken, then of course you include the timing. And the timing there would be X divided by 12. So it's X months over 12. For example, if it is 5 months, it's 5 divided by 12. If it is 8 months, that is 8 divided by 12. But if the question did not give you this and just indicates how much drawings a person had taken, you would just go ahead and multiply the partner's drawings by the rate. And I'm going to begin with Chris. Chris took 17,000 on June 30th. So that is, so I'm going to put June to indicate that we're working out for June. And that is 17,000 because that's the amount that was taken times the rate of, the question gave us that, 10%. And of course, because we're given the period in which it was taken, the timing, then of course, we're going to do our calculation to determine how much months. It said June 30th. Because it's at the end of the month, you're not going to include this month in your calculation in determining how many months. So we'll start from July. If it was June 1st, the beginning of the month, then of course you would include that month. But we're not going to charge him any drawings for this month because it was taken at the end of the month. So we start from July down to the end of the accounting period, that is. So that would be, you count July, August, September, October, November, and December, and that will give us 6 months out of the year. So that is 6 divided by 12. And when you do your calculation, you would get $850. So that would be $850. Now, the other drawing was taken on December 30th. Because this was taken at the end of the year, this 17,000 taken at the end of the year, you're not going to charge him any interest because it's at the end of the year. So you can't charge that individual person. They didn't have this amount for a month. So therefore you would not charge any interest for that. So that takes us into the other partner, which is Dorcas. Dorcas took drawings April 30th. So I'm going to write April right there to indicate that we're doing April workings. So I needed some space there just to show the distinction. So that's April, and this was taken at the end of April, but the amount is 12,000. So that is 12,000 times the rate of 10%. Remember, that is the rate of interest to be charged on drawings. And because we're given the period, we have to account for that. This was April. We're not going to include April because it is April 30th. If it was the beginning of the month, then we would charge interest for that month. Because it's at the end of the month, we're not going to charge any interest. So we'll count from the month after April, which is May. From May down to the end of the period, which is December. And that will give us 8 months. That is 8 divided by 12. So 8 months out of the year. Our calculation give us a value of $800. So this partner took drawings again in August. So therefore we have to do our calculation for the interest to be charged for this amount that was taken at the end of August. So that is 12,000 times the rate of 10% times the period, because we're taking into account the timing. And we cannot count August in it because this was taken at the end of the month. So therefore we begin from September down to December, which is the end of the accounting period. And that would give us 4 months out of the 12 months for the year. So we multiply that by 4 divided by 12. So this is 12,000 drawings times the rate of 10% times 4 divided by 12. Of course, you can simplify this, but I am not going to do that now. And if it is that you want to ensure that you're accurate and you don't simplify and get that incorrect, you can just leave it like this. And the amount there is 400. Dorcas also took drawings on December 31st. Do we charge interest for this one? No, we are not going to charge any drawings because this was taken at the end of the period. So therefore, no interest will be charged on that drawings. Based on calculation, we have 800 for April for Dorcas, and we're going to add to that 400, and that will give us a total of 1,200. So Dorcas is to be charged $1,200 for his interest on drawings, while Chris will be paying an interest of $850. We are going to take a close look at interest on capital. Interest on capital. How do we calculate interest on capital? It's very simple, and that is the partners capital times the rate. That's the partner's capital times the rate. So don't forget that the formula in calculating interest on capital is partner's capital times the rate. And I'm going to begin with Chris. Now, what is Chris capital? Chris capital balance, and that's coming from the question as indicated, that is $40,000. So therefore it is 40,000 times the rate of 8%, and that gives us a value of 3,200. So Chris interest that you receive on his capital is 3,200. How did we arrive by that? The 40,000 capital given in the question, as you can see there, so this 40,000 is what we calculate there, times the rate of 8%, and that gave us 3,200. We're going to do so now for Dorcas. So Dorcas capital is 60,000. We times that by the rate of 8% as given in the question, and we have a value of 4,800 for Dorcas interest on capital. So Dorcas is to get 4,800. How did we arrive by that? It is the 60,000 given in the question times the rate of 8%, and that gives us 4,800. We're now going to look at the actual preparation of the partnership profit and loss appropriation account for the year ended December 31st, 2004. The first thing that you need to enter is the name of the partners, and that is Chris and Dorcas. We're preparing the profit and loss appropriation account for the year ended 31st of December 2004. before, don't forget to put in your full heading. In doing your appropriation account, you will pick up your net profit. No, there are times when the net profit is not calculated and you will have to go through that process and calculate it. You know how to do that. In this question, we're presented with the net profit, and that value is, as indicated right here, the profit for the year is $95,950. So we're going to enter that in our appropriation account. So profit is $95,950. To that, you're going to add interest on drawings. And the reason for this is that the interest on drawings, remember, the partners are paying this as a penalty on the amount of drawings that they have taken from the business. So therefore, this is going to increase the value of the, it's going to increase the value of the profit that is in the business. Chris, based on calculation, remember we have calculated Chris interest on drawings and Dorcas. If you look at the calculation, Chris is $850 and Dorcas is a total of $1,200. So we're going to enter those values in the appropriation account. Chris $850 and Dorcas is $1,200. We're going to add these two values together to give us total interest on drawings, and that is $2,050. This $2,050 is added to the profit. Remember, this increases the profit, so therefore we are adding, and the amount right there is $98,000. Now, after we have entered that, we're going to pick up our interest on capital and salary to be paid out to partners. And because these values are being paid out to the partners, we're going to subtract those. So we're going to proceed to less interest on capital. And we begin with Chris. We're going to go to our workings and pick up the actual figure. In our workings, interest on capital for Chris is $3,200, while for Dorcas, that is $4,800. Remember, we have calculated those earlier. So Chris is $3,200 and Dorcas is $4,800. We're adding these two figures together now to get total interest on capital, and that is $8,000. Also, we're subtracting salary. So these figures are being paid out to the partners from the profit, and we're subtracting those. The salary, the partner that receives salary based on the question, we're going back to the question and picking up that information. If you look at note 2, it's highlighted right there that Chris is to be credited with a salary of $6,000 per annum. So that we're going to take down to our appropriation account, because we're definitely showing the amount that we're paying out to our partners from the profit, and that is $6,000. We're going to add the total interest on capital with the salary, and remember, this salary is paid out to Chris. We have to indicate the partner that we pay the salary to. So we're adding the $6,000 and the $8,000 simply because those reduce, that's the total of what reduces the profit. And $6,000 plus $8,000 give us $14,000. This $14,000 is subtracted from the $98,000, and that leaves us with $84,000 in value. This $84,000 represents the balance of profit that is in the business. This balance of profit after the appropriation is then shared between or among the partners. In this case, we have two partners. So I'm going to write balance of profits shared, and you need to go to the question and pick up how you are to share the profits. There are different ways in sharing the profit. You could share via ratio, you could share equally, you could share based on percentage. And in this question, the other way in which you could share is via the amount of capital that is contributed by the partners. So you're asked to share profits and losses between Chris and Dorcas in the same ratio as their capital. In sharing in the same ratio as their capital, you pick up the partner's capital. So I'm going to highlight the partner's capital so that we can recall the value of the capital contributed by each partner. Now, the formula in calculating that using the partner's capital is the partner's capital divided by total capital, and of course that will be multiplied by the share of profit. So the ratio sharing in the same proportion as the capital contributed by the partner, that is partner's capital divided by the total capital, and therefore, and definitely you're going to calculate that on the amount of profit that is remaining in the business that you're sharing between the two partners. Now, we look at that, for Chris, that total capital contributed by Chris is 40,000. So if we should calculate the ratio for Chris, it is 40,000 divided by 100,000. And for Dorcas, it is 60,000. Remember, that is the amount of capital contributed divided by 100,000. And remember, this is for Dorcas, as the workings for Dorcas. Now, what you could do is that you could simplify it by getting rid of the extra zeros right there, and you could say 40%, and for Dorcas, that would be 60%, and it could go lower. You could simplify it lower, but I'm just going to work with the 40% and the 60% in doing the workings. So remember, in using the same proportion, sharing the profits and losses in the same proportion as capital, it is the partner's capital divided by total capital times the value of the profit that you are sharing. So we begin with Chris, and remember, it is the 40% times the profit that we're sharing, which is 84,000, that same value that you have double underlined. So you can show your workings beside the partner, or you could go back to your section where you have your workings and show it there. When we find 40% of 84,000, we get a value of 33,600. And we're going to do the same for Dorcas, but remember, based on calculation earlier, Dorcas is to get 60% of the profit. So 60% times the profit of 84,000, and that gives us a value of 50,400. Now, when you add those two together, you should get back the same value of profit that you have shared, and that is 84,000. In reviewing the concept of the profit and loss appropriation account, now that we have completed that for Chris and Dorcas, remember, you pick up your net profit. In some questions, it is given. In some, you'll have to calculate your own net profit based on the figures that are given. You add your interest on drawings, because remember, this is the penalty that each partners have to pay for the amount of drawings that they have taken from the business. And remember, in calculating interest on drawings, that is the partner's drawings times the rate, and you take the timing into consideration, and that is X over 12, whether it be 5 months, 6 months, whatever it is over 12. if that is given. So if the question does not tell you when the partner took the amount from the business, then of course it would be the partner's drawings times the rate. The next thing that you would do is less what the business would have to pay out of the profit to the partners. The business would have to pay interest on capital, so therefore you subtract that. In order to calculate interest on capital, remember it is the partner's capital times the rate. And also the business would pay salary to any partner as required under the partnership deed. And that was agreed upon. Now, Chris is to get a salary of 6,000. That is why we added that 6,000 to 8,000, because we're subtracting all of what should be paid out to the partner from the profit of 98,000. And we are left with 84,000 to be shared between the partners. So this 84,000 represents the balance of profit that you are to share between the partners. The question indicated that you're to use the ratio in proportion to the capital invested by each partner. Remember, in order to do that, it is the partner's capital divided by total capital, and then you times that by the value of profit that you are sharing or loss, if any. So that is a concept in doing your profit and loss appropriation account. The next thing that is required, we're going to look at part B, and part B asks us to prepare the capital and current accounts for the period. So we're going to look at that now. In doing the capital account, you would have to go up to the question and pick up go to the question and pick up the capital that is contributed by the partners. In this case, we're seeing that Chris contributed 40,000 as a reminder, and Dorcas contributed $60,000. We're going to reflect that in the capital account, and all you're doing is just showing the balances, because we don't have anything else that relates to the capital right now, because there wasn't any injection of additional capital into the business by any of the partners. At this stage, I'm going to use the columnar format. So you'll find that both partners' capital balances will be in the one account, but in fact, they're separate because the columns will indicate the name of the partner. And that is January 1, that's the opening balance. And the details is balance brought down. And the amount for Chris is 40,000, while for Dorcas, that is 60,000. And that's it for the capital account. We're now going to do the other part of part B, which is to prepare the current account. Now, the current account basically shows the partner's worth in the business. And for the current account, the normal balance is a credit one. And once it is credit, it means that the business is owing whatever credit balance to the partner. If it is a debit one, it can be a debit balance, just the same. If it is debit, it means that the partner has withdrawn more than his or her worth in the business and therefore is owing the business. If it's a credit balance, the business is owing the partners because that is what they have in the business. While if it is a debit balance, it means that the partner has withdrawn more than the value of what they have in the business, and therefore they are owing that balance to the business. The current account, we're going to pick up everything that increases it or decreases it. So those items that affect the current account. The first thing that you would go for, the first thing that you will pick up from the question is the current account balances. The current account balances. Now in this case, notice that Chris is 5,000 while Dorcas is 3,000, and those are credit balances, meaning you're to put this value on the credit side. If credit is not beside it, nothing is beside it any at all, you credit it just the same, because remember the normal balance for a current account is a credit balance. However, if the amount is in bracket or if you're seeing debit beside it, then of course you debit that value. And remember, Once it is a debit balance, the partner has withdrawn more than what he or she has in the business and therefore is owing that value to the business. So let's go ahead and put in the balances. Remember, Chris is 5,000 while Dorcas is 3,000. Remember, it's a credit balance, so therefore we are going to credit, and that's at the beginning of the period, January 1, 2004, details balance brought down, and the amount there is 5,000 for Chris and 3,000 for Dorcas. The other thing that you would look for would be the coming from the question, and that is the drawings. So in the question, you were presented with the drawings as it relates to both partners. And we have for Chris a total of 34,000. You could show these separately. So you know that you'd pick up for June and then you pick up for December, or you could just go by the total. So I'll be using the total for the period. Dorcas for the period had withdrawn $36,000. So we're going to enter those in the current account. Remember, the drawings will decrease the partner's worth in the business. So therefore, that's a credit. Remember, the drawings would decrease the partner's worth in the business. So therefore, that is a debit balance. Remember, you decrease on the debit, increase on the credit. That is December 31st, details, drawings, and we're going to enter the drawings for both partner. Chris at a total of 34,000, while Dorcas withdrew 36,000 in total. Now, the other thing that we're going to pick up as it relates to the current account, we're going to post from the profit and loss appropriation over to the current account. So we're going to do some postings. We're going to look for those things that we have in the appropriation account that would increase or decrease the partner's worth. And we're going to start with the interest on drawings, seeing that is at the top. The interest on drawings, this is a penalty. The partner has to pay out this. So therefore, it is going to decrease the partner's worth in the business. So our title there is, or details is interest on drawings. And the very same value you have in the question there. Chris is $850, while Dorcas is $1,200. And we have the interest on drawings. We now move into interest on capital. What does interest on capital do to the partner's worth? What effect does interest on capital has on the partner's worth? The interest on capital increases the partner's worth. So therefore, you're going to credit this value. So December 31st, or details interest on capital, and the value for Chris is 3,200. They use the columns accordingly as you go along. They share the same details. So all you need to do is just put the amount as reflected in the respective columns. Dorcas is 4,800. Other information, the salary paid to Chris would increase Chris' worth in the business. So therefore, we're going to credit that to the current account. And Chris gets salary of 6,000, while Dorcas doesn't get any. There's no need to write anything in Dorcas space. You could put a dash, or in this case, I'm just going to put as simple 0 right there. And we continue. The balance of profit has an effect on the partner's worth just the same. If it is a profit, it will increase the partner's worth, so therefore it's a credit entry. However, if it is a loss, that would decrease the partner's worth, so you would debit that. So in this case, it's a profit, so we're going to credit. So we're going to put share of profit, and the share of profit for Chris is 33,600, while for Dorcas Dorcas, that is 50,400. So we're now going to balance off the current account now that we don't have anything else that affects it, right? So we're going to determine if the partner is owing the business or the business is owing the partner. So let's go. In this case, I'm seeing where the debit side is shorter than the credit. So therefore, our balance carried down is reflected there. So our details balance carried down, and the value for Chris is 12,950. So you would total your credit, total your debit, and find the difference between the two sides. Don't forget the concept in balancing off an account. We'll enter Dorcas balance just the same. Dorcas debit side is short of 21,000. And now that we have in those, we can then put in our totals. And our total for Chris is 47,800, while for that's 47,800. For Dorcas, it is 58,200. Okay, so the next thing is to put in our single line above, double line below for the totals. And then our final thing for the current account is to enter our balance brought down, or CDs on the debit side. So therefore, our BD would be reflected on the credit side. And our date is 2005. That's January 1. And our details balance brought down. And the amount for Chris, same thing as it carried on, 12,950. And Dorcas is $21,000. Now, because the partners closing balance is on the credit side, it means that the business is owing the partners. So the business is owing Chris $12,950, while for Dorcas that is $21,000. If that was on the debit side, it means that the partner would have exceeded his worth in the business and is therefore owing the business. But in this case, we're seeing where the business is owing both partners. So remember, your current account increases on the credit side, while it decreases on the debit. So your opening balance, remember, if it is debit, then of course you put that on the debit side. But if it is a credit, you put that on the credit side. If nothing is beside it and the figure is positive, then that is the credit balance. However, if the figure is negative, that is a debit balance. Your interest on drawings, your drawings will decrease the partner's worth, so therefore you debit those, and the interest on capital is salary, the share of profit, that would increase the partner's worth in the business, so therefore that is credited. When you're finished, you ascertain the balance that is in the account by finding the difference between your debit and your credit. Your smaller side, you put your balance carry down there, put in your total, then on the larger side, which is opposite of your carry down, you would put your balance brought down. And that concludes the requirement for the current account. Now, let's see if we have complete everything for the question. No, we have part C, but part C asks you to explain. Part C requirement is that you're to explain the meaning of a debit balance on a partner's current account. I've mentioned that so many times, but never mind. The reason a partner's current account carries a debit balance is that the partner has withdrawn more than is worth in the business and therefore is now owing the business that balance in value. So if it is a debit balance of, say, for example, $50,000, the partner would be owing $50,000 to the business. So That takes us to the end of this lesson. In another lesson, I'll be looking at how you share profits and losses. And there's one more thing that needs to be looked at as it relates to partnership, and that is preparing a balance sheet for the partners. That is relatively simple. I'll find a question with that and work it.
Like, share, and don't forget to subscribe.